Essay 210, agreeing the terms of audit engagement. Contents of engagement letter, scope and objective of auditor, nature of service to be provided, for example statutory audit or tax audit. Second is auditor responsibility. Third is management responsibility for preparation of financial statements. Fourth is identify of applicable FRF for the preparation of financial statement. Fifth, reference to the expected form and contents of any report to be issued by the auditor, and the statement that there can be circumstances in which a report may be differed from expected form and content. Important point is precondition for an audit. As per SA 210, precondition for an audit can be defined as used by the management for an acceptable financial reporting framework to prepare financial statement, an acknowledgement or agreement that they will consider the following. They will provide access of all the information which is required for the purpose of audit of financial statement, for example books of account, documents and record, etc. They will provide unrestricted access of person which within the entity from whom auditor determine that is necessary to obtain audit evidences, access to additional information that auditor may request from the management for the purpose of audit. Management should also acknowledge that they are responsible for internal controls which are required to prepare financial statement from the material statement free from material misstatements. It is responsibility of management to comply with all applicable laws and regulations. Limitations on auditor's scope prior to audit engagement. If management or TCWG impose a limitations on the scope of auditor's work and auditor believes such limitations will result into a situation where auditor will be required to give disclaimer of opinion as per SA 705, then auditor should not accept such limited scope engagement. If any of the above mentioned are not present, if preconditions are not present, the auditor shall discuss the matter with management. Auditor shall not accept the proposal or proposed audit engagement if auditor is determined the FRF to be applied in presentation of financial statement is unacceptable, or if the agreement of management is not obtained for reasonability of management to preparation of financial statement. Internal controls for preparation of financial statement and provide access of all the information to auditor and unrestricted access of person within the entity. Recurring audit. In case of recurring audit, auditor is not required to provide a new or revised engagement every year. However, there can be certain circumstances which may require auditor to revise the existing term of engagement. Following factors may require an auditor to revise the terms of engagement: when there is a change in senior management or board of directors, when there is a significantly change in ownership, change in applicable FRF, change in applicable legal and regulatory requirement, change in a nature of service to be provided, for example tax audit, limited review for listed company, when there is any indication that the entity misunderstand the objective and scope of audit, acceptance of change in engagement term during the course of audit. General contents of as per SA 210, auditors should not accept to a revision in the engagement term during the terms of audit unless there is a reasonable justification for the revision. If revision terms result into a lower level of assurance in comparison with the original terms, then auditor should not accept the revised terms. If auditor is unable to agree to change the terms of engagement, then he should request the management to continue with the original terms. If management does not permit to continue with original term, then auditor should withdraw from the engagement unless prohibited by law and regulation, and he should determine whether there is an obligation to report about his withdrawal to the third parties or regulator as per laws and regulatory requirements. If auditor conclude that there is a reasonable justification to of change of engagement term, the auditor may accept the change in terms and shall record the new terms in terms of engagement in the engagement letter. When auditor accept the change in terms, to avoid confusion for the readers, auditor should not include the references of original audit engagement or any procedure that may have been performed in original audit engagement. Reason for change in circumstances affecting the need for the service. Change in circumstances affecting the need for the service. A misunderstanding as to the nature of an audit as originally requested, or a restricted restriction on the scope of audit engagement, whether imposed by management or caused by other circumstances. Other important points in essay 210: auditor shall agree the terms of audit engagement with management or TCWG. It is important that both auditor and management should be clear about the nature of engagement. Therefore, engagement terms should be recorded. If laws and regulations prescribe in specific details the terms of audit engagement, then auditor need not record them in the written engagement except for the fact that such laws and regulation applies and management acknowledge and understand its responsibilities.